Welcome to the news update. We are kicking things off with a look at how service providers can revolutionize their business models. Robin Olds, a senior business development manager at Cisco Systems, is making a big case that ISPs need to move beyond simple bandwidth pricing. He is pushing for tiered service levels based on quality of service, and he is championing network slicing and offering AI edge services to enterprise accounts. This is a game changer for connectivity, and we dive into how ISPs can start monetizing the intelligence of tomorrow. And an underwhelming AI monetization strategy, putting pressure on CRM. We break down why this transition from a growth platform to a cash generator is causing investors to rethink their positions in the tech sector. Finally, we look at how athletes are capitalizing on their own data. Tyson Fury has joined Datavault AI as international spokesperson to promote their new nil monetization platform. This partnership ties global star power to data monetization and tokenization technology. Stay with us as we analyze this massive move and what it signals for the future of athlete rights and digital asset ownership. Don't forget to subscribe and hit that notification bell for your next big story. Service providers are urged to evolve beyond simple bandwidth-based pricing models to unlock new revenue streams from their networks. Robin Olds, a senior business development manager at Cisco Systems, advocates for tiered service offerings based on quality of service. Olds suggests that internet service providers, ISPs, can capitalize on advanced network capabilities such as network slicing and the monetization of distinct performance traffic lanes across their infrastructure. Moving beyond speed metrics, Olds emphasized that providers must prioritize network performance metrics including latency, jitter, and packet loss when structuring services. Furthermore, he highlighted the growing importance of integrating AI edge services for enterprise accounts as a key monetization opportunity. As federal investment drives network development, Olds stressed that this is a crucial juncture for ISPs to innovate. He posits that the future of networking is shifting from merely connecting people to connecting intelligence, underscoring the significant role artificial intelligence will play in connectivity. Olds believes service providers are uniquely positioned to be the first to deploy AI-driven solutions to consumers, subscribers, and enterprise clients. A new report from creator platform FanView indicates a significant shift in creator monetization, arguing that artificial intelligence is reshaping income generation by focusing on fan engagement rather than purely content output. Titled AI Monetization: How Creators Will Earn in 2026 and Beyond. The research suggests that AI-powered fan engagement is now a more potent income driver than AI-assisted content production. The report highlights the broader creator economy, which is expanding at approximately 23% annually and is projected to surpass $1 trillion by 2033. Despite this growth, the study found that over half of surveyed creators still earn less than $15,000 annually, and 52% have experienced burnout. FanView co-founder and co-CEO William Monange identifies the core issue as a structural flaw, the assumption that content output directly equals income. He states that fans desire deeper connections, not just more impersonal content. While 91% of creators have integrated AI into their content creation process, the report categorizes this as incremental AI. used primarily for production efficiency, such as ideation, asset generation, and editing, rather than direct revenue generation. The research indicates that increasing posting frequency only boosts revenue when platform algorithms reward the activity, noting that engagement peaks and declines over time. The report emphasizes that the true value in the creator economy lies in direct-to-fan sources like memberships and live streams, where creators earn up to 40 times more than on platforms like TikTok. This model relies heavily on sustained personal interaction and responsiveness, which the report identifies as a capacity constraint. This is where AI presents the most significant monetization opportunity. Creators using AI-assisted messaging on FanView earn 6.3 times more than those who do not, and 73% of income-generating creators using chats also employ AI text generation tools daily. Furthermore, response time is critical. An 18% drop in subscription revenue was observed when response times exceeded 48 hours. The recommended strategy is a progression from manual to AI-assisted to AI-augmented engagement. The report advises that creators should use AI to maintain presence across numerous fan relationships while retaining human oversight for voice, boundaries, and escalation points, ensuring transparency with audiences about AI use to build trust. Pure automation is cautioned against, as it risks eroding the relationships essential for subscription revenue. Salesforce stock is trading near its 52-week low, prompting concerns from major financial institutions regarding its future monetization strategy, particularly in the realm of artificial intelligence. Bank of America reiterated an underperform rating on Salesforce, CRM, on Monday, setting a price target of $160, which represents a significant downside risk from the stock's opening price of $173.77. The sell-side analysis from BofA centers on three primary weaknesses: muted growth in new customer acquisitions, limited opportunities for upselling existing clients, and an underwhelming pathway for monetizing its AI initiatives. The bank views the company as shifting from a high-growth platform to a more mature cash generator, projecting annual growth around 10%, a structural deceleration from historical trends. Despite the cautious outlook, Salesforce's recent financial performance remains solid. The company reported Q4 earnings of $3.81 per share, surpassing analyst estimates of $3.05 by 76 cents. Revenue reached $11.2 billion, slightly exceeding the consensus of $11.18 billion, marking a 12.1% year-over-year increase. The consensus among analysts covering the stock is mixed, with 25 buy ratings, 11 hold ratings, and only 2 sell ratings. The consensus price target stands at $274.56. Other firms maintain positive stances. Truist Securities holds a buy rating with a $280 target. Barclays maintains overweight with a $252 target, and Jefferies has a buy rating, though it has lowered its target from $375 to $250. Management has signaled confidence in the stock's valuation through strategic actions, including the approval of a $25 billion share repurchase program in March, which allows the company to buy back up to 14.1% of outstanding shares. Furthermore, institutional holders, who control 80.43% of the stock, have seen increased activity in Q4, with funds like Brighton Jones and Revolve Wealth Partners boosting their stakes. Operationally, Salesforce has streamlined its reporting by segmenting revenue into Agentforce apps and Data 360, and has expanded its partnership with Google Cloud to deploy AI agents across major platforms like Slack and Google Workspace. Looking ahead, Salesforce has guided for FY 2027 EPS between $13.11 and $13.19, with Q1 EPS guidance set between $3.11 and $3.13. Current analyst expectations for full-year EPS are lower, at $9.71. The stock currently trades at a P/E ratio of 22.25 and a beta of 1.14, supported by a high gross profit margin of 77.68% and a low debt-to-equity ratio of 0.18. Datavault AI has secured a high-profile partnership with two-time world heavyweight champion Tyson Fury, appointing him as the international spokesperson for the company. This deal was brokered by Nick Hunter of P11 and positions Fury to promote Datavault AI's Sports Illustrated exchange, a platform focused on name, image, and likeness, NIL, monetization for athletes, influencers, and rights holders. Tyson Fury, ranked number 3 on Forbes' 2025 list of the world's highest-paid athletes with an estimated earnings of $146 million, brings significant global star power to the initiative. Datavault AI stated that Fury's involvement will accelerate awareness for its quantum-secure data monetization platform and information data exchange, IDE, which tokenizes real-world assets and allows for the monetization of data and digital assets. CEO Nathaniel T. Bradley of Datavault AI emphasized that Fury's authenticity and strength align perfectly with the company's mission. He noted that Fury's participation will help confront challenges in name, image, and likeness monetization, while highlighting the importance of cybersecurity against future technological leaps. Fury expressed enthusiasm, stating that Datavault AI is providing athletes and creators with tools to own and profit from their name, image, likeness, and data in the digital age, and he is proud to help bring the Sports Illustrated exchange to the world. This announcement builds upon Datavault AI's recent activities, which have included updates on NIL monetization for the 2026 NFL Draft, funding term sheets for GPU edge networks up to $120 million, and a $150 million Gold Vault tokenization program. While AI-tagged announcements have historically shown mixed investor reactions, this athlete-focused announcement is seen as a strategic move to expand the company's reach across sports, entertainment, and Web3 sectors. Datavault AI's platform leverages AI-driven data experiences, valuation, and asset monetization, utilizing technologies like the information data exchange to securely link physical assets to metadata. The company is preparing to launch the Sports Illustrated exchange later in 2026, marking a significant step in its strategy to monetize digital and real-world assets.